People inside Target were saying, look, the writing is on the wall. This is going to be a disaster.
It ended up costing the retailer $4.1 billion in after-tax losses for just 1 year.
Major retail brands are threatening to close more stores. They say rampant theft is to blame. Target is projecting it will lose $600 million by the end of the year.
Has the once beloved one-stop shop lost its magic? Is Target struggling to keep up with the evolving retail landscape? Now, the question that's been on everyone's mind: why is the Target retail chain constantly declining? Well, let's try and unravel the mystery behind the retail industry's fall. Since the Dayton Company launched the first Target store in 1962, Target has had its corporate headquarters in Minneapolis, Minnesota, which is also its hometown. The retailer's main areas of strength are in areas like fashion, accessories, and home goods, which are exactly the products that customers stay away from due to excessive inflation. Target barely managed a sales gain in the first quarter, and if the company hopes to maintain its already small 2023 sales estimate, it'll require a robust back-to-school buying session. But one consumer segment is swarming to Target: affluent households. Even though they are relatively modest, the shop is getting enough of them, and hence if overall sales remain flat or drop, the business will still make substantial profits. Data from STI, cited by Placer.ai, demonstrates that Target performs better than anticipated in this area. While households making over $150,000 a year make up 17.8% of Target's potential market, the business is capturing 19.6% of those homes. The Placer.ai analysis noted the higher income among Target's captured market visits highlights Target's ability to attract financially comfortable consumers, which may be giving the company a leg up during the current inflation-induced retail downturn. However, this is not entirely novel. Target has a long past of reputation as a more upscale discount retailer when compared to competitors like Walmart Stores Incorporated and Amazon Inc. Moreover, we can see their ads saying, "Expect more, pay less," which is quite famous. However, Target is a big box store that caters to shoppers of all financial levels, and the vendors occasionally forget this. The most notable instance was its disastrous holiday collaboration with high-end retail giant Neiman Marcus. The failure of the collection was mostly caused by Target's high pricing of the goods. Additionally, Target has a history of doing a poor job of consistently stocking its shops with food and groceries, which are non-discretionary items that encourage repeat business since shoppers constantly need to restock their kitchen. Under the leadership of CEO Brian Cornell, the company has prioritized rebalancing its portfolio, which began with unappealing products like milk, eggs, and cereals. Could the answer to Target's decline lie in its strategies? Has Target missed the mark with their customer service, pricing, or in-store experience? Cornell recently told analysts, "Our food and beverage category was underperforming and losing market share when I arrived at Target just under 9 years ago, but we chose to lean in rather than back away from that aspect of our business." He added that much of the work happened behind the scenes, and it took time before business trends in food and beverage started to change. But the work paid off over time. After 3 years of unprecedented sales and market share gains in the food and beverage sector, Target entered 2023. It's also a good thing because Target's groceries and household basics categories are doing well, while consumers cut back on purchases of things like clothing and electronics due to concern for inflation. Moreover, the firm knows its appeal to affluent customers has historically set it apart. According to the reports, customers earning over six-figure annual earnings would commonly buy there. It is also no coincidence that Target has extensively invested in its collaboration with Ulta Beauty, another business that targets affluent consumers while still selling a wide range of goods to customers of all income levels. The Placer.ai analysis stated that Ulta seems to be successfully catering to all income brackets, similar to Target. The brand seems particularly strong among high-income shoppers. Target and Ulta data shows that it is possible to appeal to wealthy buyers while serving a wide spectrum of clients and being relevant in a changing market. Even during economic instability, despite persistent difficulties for retail in the present socioeconomic environment, Target's Q1 guest traffic increased by almost 1% on top of 3.9% a year ago, helping to lift profitability above forecasts. During an earnings call, CFO Michael Fidelki said, "The environment today feels completely different than 3 years ago when the pandemic was just getting started, and no one knew what to expect. But even though the pandemic seems to be behind us, there is still increased uncertainty and volatility as the world adjusts to a new normal." According to Zach Stambor, a senior analyst with Insider Intelligence, Target is a pandemic-era winner. He added that the retailer's annual revenue increased by about 40% between 2019 and 2022 due to a convenience-focused approach which provided several options for fulfilling online orders, including delivery, curbside pickup, and in-store pickup. However, Stambor continued, Target faces challenges year over year when customers reduce their discretionary spending. Moreover, consumer spending has shifted away from the very types of discretionary purchases that fuel Target's impressive pandemic-era gains, such as on-trend apparel, home goods, and consumer electronics. Instead, consumers are purchasing needs such as food, cosmetics, and supplies for the home at Target. The managing director of Global Data, Neil Saunders, agreed to his words. He added, "Unfortunately, this behavior does not fit the present consumer economy. Instead, consumers now go on more concentrated missions where they set spending limits and are less likely to stray from them." And is it all doom and gloom for Target, or is there a possibility of a turnaround? What can Target do to rise from the ashes? During an earnings call, CEO Brian Cornell stated that discretionary spending has declined while consumers have boosted their spending on cosmetic products, food and beverages, and household staples. But a temporary decline in discretionary spending doesn't imply that we'll abandon our clothing, home, and hardline categories. Cornell added, "Instead, we'll keep investing in them and bringing you brand new merchandise all year long." While consumers are usually spending a little less overall, the good news is that Target has modestly expanded its share of the market. Also, more individuals are visiting Target stores or internet, drawn in by the retailer's reputation for offering good value and their love of browsing. When customer demand begins to pick up, the company should be in a strong position. However, it'll take some time before this happens and Target fully recovers. Fidelki claimed that, in contrast to the previous year, when our operations absorbed $1.4 billion, that operations earned $1.3 billion of cash in the first quarter. The modifications in our inventory investment from the previous year were nearly entirely responsible for the significant year-over-year improvement. Right-wing media sources and figures have frequently reported that Target's collapse was stopped after a 9-day losing streak, where shares fell to almost a 3-year low due to criticism of its Pride Month apparel. A Friday Fox News headline states, "Target shares hit 3-year low as Pride backlash hits the bottom line." Regarding its yearly Pride Month clothing line, Target becomes a target of a campaign that quickly gained popularity on social media. The anti-LGBTQ campaign circulated false information about the Pride Month items and Target's business practices, with the help of far-right figures like self-described theocratic fascists on social media platforms. When Target staff were threatened with violence, there were instances of vandalizing merchandise and store displays, and hence the campaign turned ugly. In order to ensure the safety of its employees, Target announced that it was removing a number of items that opponents had responded to in the most volatile manner. However, JP Morgan did not mention the consumer outcry against Target's Pride Month merchandise. According to Barchet, there is a severe downdraft in retail, and the status of the customer is causing genuine panic. Thanks for watching, everyone. We've unearthed some surprising factors contributing to the decline of the Target retail chain. But what are your thoughts on this? Do you think Target can make a comeback, or is it game over for this once popular retail giant? Please drop your thoughts in the comments below. If you found this video insightful, please give it a thumbs up. And if you haven't already, subscribe to our channel for more content exploring the ins and outs of various industries. And remember, every time you hit that notification bell, you'll be the first to know when we drop a new video. Until next time, stay curious and keep exploring.